Hello and welcome to the week ahead. It was a crazy week in the markets this week with a crazy rally off the lows where we thought we were on the precipice of weekly consolidation, and then we shot straight up to all-time highs. And frankly, we're in a mode of market now that's very different than the one that I'm used to trading. We're in what I like to call relentless grind mode, where honestly, for me, the moves are not what I'm used to trading, and so it's requiring me to use a different playbook. So I'm going to go over the stuff that I'm seeing in the markets, how I'm identifying those problems, and how I'm making adjustments in both of the types of trades that I'm taking, and also changes that I'm making into my actual trading app that helps me stay on course and on track to find success trading in this new market mode. And so without further ado, let's get into it. All right, so here we are in the QQQs. Look at this insane move we've had up, and we all kind of thought we might get a little bit of reprieve, a little bit of pullback, some kind of higher low, and then move up, but no, that's not happening. The market had other ideas. Instead, we broke the all-time highs and we're pushing higher. So, I think the mode that we've been in from the bottom is one of higher highs and higher lows, right? And for what it's worth, I find catching higher lows nothing is easy in trading, but catching higher lows, there's ways to do it. There are patterns you can see, there's conditions that can be met, and there's ways to apply risk to that to get into longs that I do quite well in. And so this whole move up here, right from the very bottom, I had one of the best few weeks of my trading career ever. And this is not just trading QQQ, it's trading lots of different names, but it's all because the market was in this mode. And then in the last couple of weeks, it's been going not as good as we've been in this sideways action where we're going, the QQQ and the indexes were going, making highs and then lows and then highs and then lows, but sort of sideways range. And, there were other names that were making moves that consisted of higher highs and higher lows, breakouts and stuff like that. And so there was a lot of stuff for me to trade. I managed to do okay there. And ironically, now that we, as of Monday, we set a bottom and we rallied out of it. So basically we did the thing that I don't know how I missed this, but let's just let's zoom back into what happened here in the details. So this is the 30-minute chart of QQQ. This day here was last Friday. So the weekend video that I gave you last weekend was done when we were balancing down here on the QQQs. And on Monday, you can see off the open, we basically broke the low of Friday low. We rallied, and then we broke that low into a hard rally again. Now, if I'd been looking closely at this balance, this is doing a thing that I call a look below and fail, where it took a peak down here to where there was no price action before, and it immediately rallied. And it actually did it twice. Did it once in the morning and then again in the afternoon. Now, yes, all of this happened on high volume because of stuff that was happening in the news. But that doesn't change I find that letting the news dictate your decisions in trading is the wrong way to go. Being aware of the news and knowing that it's news driving something can be helpful. But in this case, price action told you what you needed to know. And that was that nobody wanted to be selling down here. Everybody was buying down here. And so this is a look below and fail that basically propelled the market upwards. Look at this rally off that low. It was basically nonstop. Look at it on the 5-minute. So off those lows, there was a nice 5-minute higher low, and then nonstop up here, sideways into the close, and then gapping up. And since we made this move, this like rally off the bottom and gap up, it's been, gaps abound, right? So we gapped up that day, we rallied, we did this slow, I call it the slow, steady grind all the next day, a little bit of a dip into the close, gap again. Come back in and test midday's range from the day before, a little bit of, softness in the close, move up again. So we didn't actually gap, we moved up, we were testing the highs, another dip into prior day's range and move up again, and gapping up this morning, and then a back test of yesterday's high, and then rally again, and then finally we get some relief here at the end of the day on Friday, which I'm sure had probably more to do with the fact that it was options expiration than anything else. But we do have QQQ overbought on the daily time frame, overbought on the 4-hour, et cetera, et cetera, et cetera. So while we were at the tops here, we needed some relief, right? But now that we're in this mode, I call this mode the slow, relentless grind. And this is not marked by daily higher highs and higher lows. It's marked by things that I find particularly very difficult to trade, like gaps up. I don't feel comfortable unless I catch a bottom, which I wasn't good at catching it on this Monday. After that, it's like gaps all the time. And I wasn't, as we're getting weak into the close, I don't feel comfortable holding overnight. And of course we gap up the next day, but what if we didn't gap up the next day? And so it's if you're initiating new positions in a market where it's doing the slow, steady grind, I personally find it really difficult to trade. And so I'm going to go over really quickly an example of exactly what I'm talking about on a name that's not QQQ, and talk about the things that I've identified there that are problematic to me, and also just like how I need to adjust my trading to make it work. Because this week, for the first week in a while, I had a red week. It wasn't a terribly red week. My month is still green, but it was the first one I've had in a really long time. And it's crazy to have a red week in a week where things are rallying like crazy. But it's just this type of market where these moves are happening, a lot of them overnight. I find that particularly difficult. Okay, so Meta on the daily time frame here, I had been talking about how it was in a state of balance here, and that it was either going to come in for weekly higher low or it was going to break out. And of course, with the market acting the way it is, it broke out. You can see there's gaps in here too. So this is one that I've been trying to get involved in, and I made an attempt at this on a specific day that didn't work. And so I'm going to show you the attempts that I made and why they didn't work. And then I'm going to show you the adjustments that I'm making to try to make it work. Okay, so going down to the smaller time frames, the day that we're going to look at is this day right here, which was Thursday, so yesterday. And just doing a bit of background on what happened in the days before. So here was this day here, this move down was right here, and then here was an inside day, and then we gapped up out of that, right? So immediately, like, unless I was here buying the lows on that Monday, and by the way, when the Qs were setting a lower low on Monday, remember we went low off the open on the Qs, and then in the afternoon we went lower. Well, look what Meta was doing, higher low. Now it did have a deep dip also, but this, for whatever reason, it didn't catch my eye at the time, and I did not trade this name, and so I wasn't getting in at this higher low. So that's why on the subsequent day, when the entire market was gapping up and we get a pull in here, where did it pull into? Let's have a look. Here was high of prior day, couldn't fill that gap. So and look at the wicks on these 30-minute candles. So it's like a hard rally, a pull in. When it pulled in, it didn't hold the level from pre-market, it went lower. These are things that I find difficult because I typically play off specific levels. So if you're not playing off specific levels that are holding, then you're relying more on patterns. And some of the patterns that I look for, like a falling wedge, I'm not so great at playing falling wedges. I have a harder time with those. So this makes it a difficult thing for me to trade. And then, so this was Tuesday of this week after the Monday rally. And then we were gapping up into the open, and then we came in, tried to push up, couldn't, and we basically topped out at the high. So we had basically a day of rest here for Meta. And then coming into the day of interest on Thursday, I had seen this forming, this pattern here. And so when I see a stock do this, where it's setting a ceiling, that on the 30-minute chart, I can see things topping out, hitting that ceiling. And I can also see it's kind of in a range here, right? So the low of this candle here, this 30-minute candle, and the low of this candle here are the same. So we're building a range. So I'm looking, is this range bottom going to hold? Is the range top going to break? And so on the open, I'm thinking about levels that I could be playing off of. I'm also looking at, the one really important level here that really matters is this one, which is yesterday low of day, but it also is an hourly higher low over the hourly higher low of the prior day. So the hourly uptrend is going to be held if yesterday low of day holds. So, in my mind, as we're coming into the day here, I'm thinking, okay, well, it would be really cool if it just shot up off the open and just went like gangbusters. And so that's what I was hoping for. Let's get down to a smaller time frame. So right off the open, I took a long on this name, and it shot up and immediately came right back down, which is never a good sign. And so my idea on this trade, if I'm taking this trade, is it needs to shoot up and continue to shoot up. So as soon as I enter, my stop is like right there. I'm assuming it's not going to even go 10 cents below where I entered. So as soon as it comes back in, I stop out. My next trade was as it came down, I started testing the lows of this range, which I think the lowest level was here. But still kind of represents the whole range of pre-market. And like if I look back to prior day, there's no specific level here that I need to care about really. This sort of dark brown line here is the 2-day VWAP. So the VWAP starting from regular trading hours of prior day. This is a custom indicator that I wrote here that shows me various VWAPs. And so, and I do it based on regular trading hours. I don't, you can see like I fade the colors of this line as it goes into after hours, and they go flat because I'm not counting any bars in extended hours in my VWAP calculations. I want regular trading hours VWAPs. So regular trading hours VWAP from the day before, that's where it bottomed out. It's not typically a thing that I trade off of. I don't treat VWAPs as a level. I treat them as an area. And so the fact that it touched this was kind of not significant to me. And as Meta was chopping around here on the 5 minute, I took a shot here with a stop below that pre-market level, somewhere down here. I give it a bit of wiggle room. And I also want it below a round number. So I had it below 712. And of course, it stopped me out. It took a full stop on it, I think, and then rallied hard from there. So, this to me is difficult trading, right? Like names that like break levels and don't hold them. That's really hard. And most names that I trade, and most of the names that I traded this week, did not respect levels. On this particular day, I had my reddest day on Thursday, and it was doing trades that I would always normally do, not doing anything different than I normally would. And I think I took 4 full stops in the morning. One, and it was all within the first hour of trading. And so that was pretty rough to do that, because that's basically a half portion of a day for me gone. And these were full stops. These weren't like, normally I can be pretty protective, and if price action is not doing what I like, I can adjust things around. I can dump some of the stock I'm holding if it immediately doesn't do what I want, because I have this belief that the best trades work right away. So if I get into a trade and it doesn't do what I expected it to do right away, I might dump half of that position right away and only risk half of what I was going to risk in the first place. Especially on the open, it's really important to be nimble. So this was sad that it didn't work for me. So when I look at this, I'm like, well, what could I do? What could I do right off the open? And I think the answer is, in this market, every single name that I was trading off the open, those first 20 to 30 minutes, where normally I get my best trades of the day, all of them were choppy and very, very difficult to trade and not respecting levels. And it basically means that in this market mode where it's the relentless grind up, where we're gapping up and then we've got to come in and find a higher low somewhere within the prior day's range, and then have maybe a few fake outs before we continue to the upside. I actually think that Meta on this day was the smoothest stock in the whole tech world on the way up here. And you can see, like, once it finally got above this VWAP here, the purple line here is regular trading hours VWAP. Once it got above that line, it was away. And every single time it came back, it would get near it, set a higher low, and continue up. And the other thing that's crazy, though, is normally, we won't see these high, like a really high, and then a really deep cut in there, and then a really high, and then a deep cut in. It's like 50% retracement or more every single time it pulls in. But it did sort of respect this 5 minute EMA 12 all the way up. That's the blue line here. And so those are the kind of moves that I'm looking for. And I just didn't do well trying to get into these for whatever reason. I would get in a little too late, and then the retracements would be too deep. And even on this name that was very strong, I didn't do well. And after taking such a big loss in the morning, I wasn't really game for putting on a lot of size. I was like, something is wrong. I need to rethink this. And then each evening as I go back, and I record my screen while I'm trading. So each evening I go back and I rewatch what I did, and I'm like, oh, I see what I should have done. Like this choppy stuff in the morning, I basically have to stop trading. When we're in the slow grind up mode, I have to not take trades early in the morning. Or if I do, I need to have very, very wide stops. So for example, when I look at this name and I'm like, well, I know for sure coming into Thursday that if it gets below this level, then we lose the hourly uptrend. And we are not in an hourly uptrend anymore, and I don't want to be in it, because we're probably going to be coming in for a 4 hour higher low, and who knows how deep that pullback could be. And so I know that I could just widen this. I could say right off the open, I know I want to get in this name. I really think it's going to go up. I'm going to go here, and I'm going to risk all the way to here, right? But then look what you're getting on the move. It's 1.85 risk reward. So it's not even a 2-to-1, and that's not even knowing. There's no way to know that it was going to do this, right? And so that's just a lot of risk to put on, and I tend to try to get something more reasonable. So yeah, this is difficult trading for me. And so what I've come to realize is that in this market, the safest trade that I can think of to do is what I call the wait for VWAP trade, which is not, I didn't make that name up, of course. It's Brian Shannon. Brian Shannon came up with, especially on gaps, he's like, the VWAP trade works every day, but I think he called it the gap or wait for VWAP trade. But basically, you're waiting for all of this mess in the morning to resolve, and then you want to see the stock move up above VWAP, and then on a back test, stay above VWAP. Not using VWAP as a level where you make an entry, use price action to make your entries. So for example, I'll look at this on the 1 minute. We'll just see exactly what happened as it tested that VWAP, that first back test. So nice move up, start getting wicks at the top. You know it's going to get a pullback soon. Then you start getting these red candles. Sorry, they're not red. They're green. All of my candles are green because it's all green to me. I don't want to be biased when I'm looking at candles. But this is what we call a classic stair step, where the high of each candle prior is not violated by the next one. And so this, you could be watching this like this, where as soon as price on this bar gets above the high of this candle, you want to get long, and you want to risk to the low of whichever of these two was lowest, right? So let's just put it here. And you're like, because VWAP's right there, right? It had a really nice move above VWAP, came back in, is forming this wedgy sort of stair step into above that VWAP, and you want to get long. You want to see how far it can go. And you could have ridden this, even if you just did a really simple trade where you say, I'm just going to keep raising my stop until we break prior bar low. So you keep raising it up there, there. And then finally on this candle, you could take profit. If you just wanted to have a really quick trade, that's a move you could do right here on the 1 minute chart. But me personally, I'm always trying to get in for the bigger move. And so with whatever risk reward I had there, I'd take profit up into here, and then I'd be holding the rest for a move higher, targeting some level that I'm interested in. But you can see every time it did pull in, it was all above VWAP. So that's what I want to see. I want to see an uptrending 5-day simple moving average, the orange line here, and I want to see the stock holding above VWAP. So that's what I was interested in. And I didn't do well on this on Thursday, but I thought, okay, on Friday, that's today, I know what to look for. I want to see what's going to happen off the open. Are we going to gap up on things again? And then I want to see stocks that are holding above VWAP. Sadly, the only stock that I saw that was showing the kind of strength I wanted to see and holding above VWAP was NVDA, and I'll show you what happened there. We have a high on the morning, right? We're building a range. So there's the high. Now we're coming back in. Where are we going to set the low? I'm always looking for this on the 5-minute chart. Where is the opening range defined? And so there it is, okay? So we managed to pierce above yesterday high. That's bullish. So that has me leaning bullish, but I need to see how far down it's going to come. It comes down. It doesn't hold any particular level that I can see here. It's just sort of stopped down here in the middle of nowhere, up against the 5-day simple moving average, which is coming up to meet it, which is actually pretty bullish. And then it starts to move up, and it gets above VWAP. And I'm like, oh, sweet. I'm going to wait now. I'm going to wait for the pullback on VWAP. So let's see what happens. Keeps going higher. Comes back in. There was the one chance you get to get long. I didn't get it, but this would have been it, right? Let's see what happens. And I'm like, who knows where this is going to go? This is a blue sky breakout name. This thing could go to the moon, as long as it keeps holding VWAP. That's what I want to see. Well, this isn't the strength I wanted to see. Look at this. Okay, there we go. Now we're talking. Okay, now I wanted to hold VWAP again. So this is the next trade. If you didn't catch this one, you want this one to work, right? And you want your stock to go below there. Okay, let's see what happens. Uh-oh. Stopped. Going lower. Piercing VWAP. That's not good. And now what do we got? It's our friend we don't like. Mr. Evil. Scary guy. Mr. Head and Shoulders. And down we go. If we jump up to the 30 and remove this, we got this hard flush down, right down, did not break that opening range low, and then a bounce into the close. So, that's trading, I guess, right? Like some days you just can't get it. Some days the market, it's just not going to give you what you want. And so this happened on so many names today that just kept pulling in. And, what can you do? I think you just do your best with the hand you're dealt. And today was not a day where the market just kept rallying like crazy. So be it. You catch the moves you can catch. Okay. So with this all happening, one of the things that I've been doing is modifying my trading app. And I want to show you some of those modifications. Okay, so this is my trading app here on the right-hand side. And most of the time when I'm trading, I have it squished in skinny like this. This is as skinny as the Chrome window can go on my laptop screen. And then over here on the left, I'll have a window where I've got a few different charts open up normally in a 4-grid. And I've got it connected to my broker so that anything that I do here in my trading app is reflected over here on the charts. So I don't have to code charts. I use TradingView for that. I just code the actual execution of my trading app. So my trading app is a lot more than just allowing me to place trades. It shows me all kinds of cool stuff that I've figured out how to do over time and figured out that I want to see. Everything from cool little add-ons on top of the level 2 and the time and sales, so I can see in real time how many executions are really going through on the tape, and really when we're hitting resistance, what that looks like in real time. It sort of does a bunch of math on the fly and shows me really cool information. It also, and more importantly to me, allows me to very quickly place trades, and it works around a lot of the cruft you get with a standard broker. But then even beyond that, one of the things it allows me to do is implement structure around what I allow myself to do in the market. And so what you see here, this little block here that my whole trading app is down here, but on the open, when I come into to trade each day, I see this block here. And this week I added this, what is the market mode? And so the purpose of this little area here is it makes me read my rules before I trade every day. I take a few minutes, I take some deep breaths, I go over each rule, I think about each rule and whether I've been following it or not in prior days, and I commit to myself that I'm going to do it. And that's why I have this agree button at the bottom. And before I can even do that, now I added an option here, which is what is the market mode? So I need to think about this before I trade each day and decide what mode of the market am I in, because depending on the mode that I'm in, that's going to affect the type of trades I should be taking. And so I have currently slow relentless grind chosen. And these aren't names that are defined by anybody else other than me, but I've got a few different options in here so far. So there's the steady uptrend, which I just described earlier, where you're getting daily higher highs and higher lows. I've got range bound, which is what we were in before we got into the slow relentless grind, where we're in a range chopping sideways. And then I have downtrend, depending on the type, depending on which one of those four modes we're in, I'm going to need to trade in a different way. I'm going to need to think about the market different each morning, and it's going to affect what I should be doing. And so that's just on the very surface. It's just me having an awareness of what to do. However, it goes a little bit deeper. So let me agree to this. The next thing that it does is I have this checklist where I have to go through each of these things and check them before I can begin trading. Once I check all these, then this area goes away for the rest of the day. It never comes back until the next day. Okay, so before I'm allowed to trade any name, I have to plan the trade. And so now when I click plan trade, it has this current market mode box at the very top. It says slow relentless grind. And it gives me a little bit of information about the mode that I'm in, just to remind me, before I go place a trade, remember that we are in the current market mode is slow relentless grind, and these are tough, choppy days that require patience. You need to wait for retracements on the strongest names that hold above VWAP and use wide stops. And trades off the open are unlikely to work. And I say that in all caps here because that's my bread and butter, is trades off the open. So in this mode where we're slow relentless grind, I gotta sit back and cool it. I gotta just not take trades right off the open and just be really patient. Also, now that because that mode has been checked, the next thing that I do is I choose the type of trade I'm going to be doing. I have my A trades, B trades, and C trades, and I can pick any one of these, but you'll notice that some of them have these green check mark now. That means that those trades are actually good for me to do in this environment. So the one here that's got a green check is HHL, which is hourly higher lows. So that's where I'm looking at what was the hourly higher low from the day before in a stock that's trending up in the slow grind, and trying to catch the next hourly higher low above that hourly higher low. That's something that I'm pretty good at. The other one is 15-minute higher low. So this would basically be a VWAP trade, right? Where I'm waiting for a 15-minute high to be set, and then I want to catch that 15-minute higher low, which I might be doing on a 1 or 2 minute time frame, depending. And all of these other things that I do normally, they're all off the list. I shouldn't really be looking at doing any of these things while we are in slow relentless grind mode. So let's say I pick on SPY, I want to get an hourly higher low. Once I do that, it now presents me with the tools that are available to do that trade. So these are patterns or methods that I use to catch a trade, and I can define those here, and they get a grade as well. So I can say if I'm doing a level burner, that's one of my best setups, and so that's an A1. Stair step is another one that I use all the time. That's an A setup for me. Wedges, whatever. So all the way down, and then I have I can basically choose, and this happens in real time where I'm looking at SPY, I'm trying to get that hourly higher low, and I might have to go in here and say, I think it's going to be a stair step, but then in real time realize, it's actually not a stair step I'm getting. It's riding an MA down, a moving average down. And so when I see that moving average get broken by price, that's going to be my signal. So I'm going to use an MA rider break. So there's lots of different ways I can do it. And then of course in here I can go and just type in, whatever other details I have about the trade that I want to record for myself, just so then I can look at it once I close this window. So let's say I say, just for yesterday was an inside bar, I might write IB there. So now when I look at the form where I create my trades, I can see all the information that I chose. I have a B setup and a B tool, and so those two add up to be a C trade. So now that I know it's a C level trade, I really only want to choose a C size of risk, and I'll look at the chart, I'll figure out what my stop percent is going to be away from prices right now. Let's say it's, I don't know, 0.5%, and then I click this, and that tells me how many shares to buy. And then I have, if I'm clicking a C trade, and it's telling me why bother, low confidence, right? And so C trades, I tend to not do that well in them. So they're sized so that I can attempt it if I want to, but really I should just be avoiding it, and I'm telling myself that here. But all that to be said, so if I go and now change the market mode to some other market mode, and then I click the plan button here, this is going to change to information about that market mode and the types of things that work for that. And these will change as well to reflect what are the setups that work in that market mode. So this is the way I'm doing it. I'm trying to, force myself to think at every step of the day, at every little time. I'm trying to use my app to do something in the market. I want it to make me stop. I want it to make me think. Yes, even in the market where you've got to react quickly, this isn't a lot to put in front of me. And I even go so far as to have a little thumbnail here that I can pop out to another window that shows the example I just went through with you of Meta. And I talk about, what are the things that didn't work here. So my access a runner trade off the open didn't work. It didn't hold the pre-market low for a level burner. There's big spikes and big retracements. It closely tracked the 5-minute moving average, but did often go below it. So there was no steady moving average that was holding it. But then on the plus side, we have a strong 5-day SMA and daily EMA 12, and all back tests of this VWAP are being held. And so that all in all tells me there's trades I can do here, but it requires a different tool set than I typically use. And as I go through and like discover more examples of this or things I want to call out to myself or remind myself about, I can create more screenshots like this, add them into here, so I can, as I'm about to begin my day trading, I can be like, oh yeah, as I'm choosing my setups that I'm going to be doing for that day, I can look at this and it can force me to think more deeply before I take trades, and help me to make money in this market. Okay, well that's it for me this week. When it comes to the simple statement for the week, the simple statement is, we are in slow, steady grind mode, probing all-time highs. As long as the daily EMA 12 remains support, we will remain in that mode. I'm watching for daily consolidation in this coming week. I would love to see a retracement below prior day low, so we could get some sort of higher low on the daily time frame to instead of just pushing and pushing and pushing. So I'm on the lookout for that. But even today, as Qs were rolling over into the afternoon, I remember in a couple of the chat rooms I was in, people were like, "Oh my God, look at this! It's crazy! Look at all the selling." But yeah, it was selling that ended above the halfway point of prior day. So always have that context. Always remember the mode you're in. This is slow grind up mode. Don't if you feel like you're like things are going super bearish in the moment, zoom out, look at where price is relative to the day before, and understand. Yeah, it's going down right now, but this isn't a bad thing. This is an opportunity. This might be my best opportunity to get in on a higher low. And so I should be thinking of these dips that come where things are going crazy to the downside. That's my chance to get long, especially in this market where we're going to keep grinding up and grinding up and grinding up. Who knows? We could gap up on Monday. You just don't know. But as long as we remain above the daily EMA 12, I think bulls are in complete control. So onward and upward. Have a great week. Hey everybody, if you like my indicators on TradingView and you like the content I'm producing here on this channel, please remember to like and subscribe.